Today, Friday, March 20th, 2026, the U.S. stock market experienced a significant downturn, marking its fourth consecutive losing week. The Dow Jones fell over 400 points. The S&P 500 slipped 1.5%, and the tech-heavy Nasdaq dropped 1%. 1. Reasons for today's drop. The primary driver of today's decline is the escalating conflict between the U.S., Israel, and Iran. Oil price surge. Brent crude hit $107 a barrel following the blockade of the Strait of Hormuz. This has sparked fears of a long-term inflationary spike. Interest rate pivot. Wall Street has effectively abandoned hopes for a Federal Reserve rate cut this year. Instead, traders are now pricing in the possibility that the Fed might actually raise rates in 2026 to combat energy-driven inflation. Bond market pressure. Treasury yields jumped, making borrowing more expensive for both companies and households, which weighed heavily on small-cap stocks. The Russell 2000 entered official correction territory today. 2. Market predictions. After the drop, the outlook for the immediate future is cautious as the market transitions from growth-focused to risk-off. Correction watch. While the Dow and S&P 500 are down roughly 5 to 7% from their February highs, analysts warn they are approaching a 10% correction threshold if the energy shock persists. Consumer impact. Some economists predict a 2% hit to household purchasing power due to the surge in gas prices averaging $3.88 gallon nationally, but over $5 in states like Washington and California. Silver lining. Analysts from the Motley Fool suggest that if this leads to a broader crash, it may present a generational buying opportunity for high-quality companies that were previously overvalued. 3. Top 3 stocks to watch based on current market volatility and sector shifts. These 3 areas are drawing the most institutional attention. Stock, sector, ticker. Why it's trending. Kosmos Energy, KOS, up 234% YTD. As an independent oil and gas producer, it is a primary hedge against the ongoing energy crisis. Micron Technology, MU, up 36% YTD. Despite the infrastructure demand continues to keep high-bandwidth memory HBM supply tight. Intuitive Surgical, ISRG, favored by strong buy ratings as a defensive tech play, it is perceived as more resilient to the current macro turbulence than speculative software.